Hello, so this is for the subject capital markets and the topic is time value of money, but we'll be dividing this into two videos, okay? So the book that we're going to use is Capital Markets by Norma D. Lopez-Mariano, alright? So let's begin. For the introduction, the Smart Consumer Group is an educational organization offering ideas to help consumers save more and spend less. Through their website and series of free workshops, SCG introduces the keys to being a smart consumer. So SMART stands for Save Money and Reduce Taxes. So following is the story about two savers from the smartconsumergroup.com. So the key to the chart on the next page is that Saver A started saving when he was 26 years old, while Saver B started immediately at age 19, although he stopped saving when he was 26. Even though the rate of return is historical, the principle remains the same because Saver B had an 8-year head start. Saver A was never able to catch up even though Saver B stopped investing after age 25. So in saving, essentially, the earlier you start, the better, okay? So the story shows how importance of starting saving early in life. As the chart says, don't procrastinate, meaning start saving immediately. So this is a nice message for the youth, meaning start saving while you are still young. Money grows when invested because of, interest rates it earns. Okay, and then there's also the time value of money. Okay. Of course, holding on to money makes you lose in terms of the opportunity cost of the interest. You would rather have earned have you not held on to the money, but instead invested in interest-earning assets like T-bills, negotiable CDs, certificate of deposits, MMDAs, MMMFs, and the like. Okay, so there are different financial services, financial products that you can safely invest in. Okay, the value of money currently will grow to a future value greater than the current value because of the interest it will earn. More so if the interest is compounded. Okay? So, ito na yung graph. Si Saver B, nag-start siya ng age 18 until age 25. So, ilang taon lang yon? 1, 2, 3, 4, 8 years lang, no? So, yung in-invest nyo ng first year, ito yung na-earn na income. From 1.8 naging 1,902. Tapos, syempre, kung compounding yung interest, so 1,902 plus 1,8 plus yung annual interest rate for that, so ito yung magiging value niya. And then, up to this year. So, yung mula dun sa 23,989 niya, ito na yung pinaka-principal, tapos nag-earn siya ng interest sa kasunod na year. And then, of course, compounded na, ito na yung magiging basis din niya for the interest on the following year. So, at the age of 65, yung sinave niya from age 18 to 25, ang magiging valuation is nasa 2,232,200. Okay? Whereas itong si Saver A, hindi siya nag-start agad. Nag-start siya ay age 26 na. So, kita mo, ito, same lang sila ng nominal amount na sinave. Parehong 1.8. Ito, 8 years lang. Itong si Saver A is ilang years to? 26 to 65, so 36, 46, 56, almost 40 years, okay? So, ito yung magiging valuation niya. Ang inabot lang at the age of 65 is 1.7 million, okay? So, dito natin makikita yung kahalagahan ng mag-invest talaga ng maaga. So, in this chapter, students will learn the difference between simple interest and compound interest, and how to compute for them as well. So, merong computations, Similarly, students will learn the difference between present value and future value, and between ordinary annuity and annuity due. In addition, the process of getting the present value of future cash flows will be illustrated. Furthermore, the process of computing for future values, annuity due, and ordinary annuities will be discussed. Okay? So, medyo maraming computations dito. So this will help the students obtain the net present value of investments to determine if an investment proposal is acceptable or not. Alright? So first off, concept of time value of money. So money has a time value kasi, di ba, over the years, merong inflation rate, and because of the inflation rate, yung purchasing power ng isang currency is humihina. Okay? So, yung pwede mong mabili with 1,000 pesos today, pag siguro mga 2 years from now, konti na lang yung mabibili mo with 1,000. Okay? Pero kung ngayon mo siya ginamit, pinambili mo, medyo mas marami ka pang mabibili. Okay? So, yun yung effect ng time sa value ng pera. Money kept in a vault loses its value over time. What you can purchase for 1,000 today will no longer be the same after a period of time. Time value of money denotes the value of money over time. So this means that money changes its value over time. Okay? Yung piso mo today may no longer be 1 peso after a year or even perhaps 6 months from today. Again, because of inflation. The recognition of the time value of money and risk is extremely vital in financial decision making. So yung time value of money, central siya sa concept ng finance. It recognizes that the value of money is different at, different periods of time. Since money can be put to productive use, its value is different depending on the date of receipt or payment. Okay? Inflation, ito naman economic disorder characterized by continuous increase in the price level of goods and services, without the corresponding increase in the production of these goods and services. Okay? Kumbaga, same amount lang yung supply, pero due to other factors, yung price level niya is tumataas. When production does not increase, the supply of goods does not increase. And when prices increase without any corresponding increase in the supply of goods, inflation happens. Okay? This is because of the economic law of supply and demand. Kapag, let's say, yan lang yung supply ng goods, tapos tumaas yung demand for those goods, then yung price mahihila pataas. When supply is limited, demand increases in relation to the supply, causing prices to increase. When supply is abundant, kapag marami naman yung supply, ay kabaliktaran yung demand bababa, and so yung price ay magdi-decrease din to encourage purchase. Kapag bumaba yung presyo, of course, maraming tao na ang bibili. Okay? Ano kasi nangyayari? Pag limited yung supply, feeling mo mauubusan ka, kaya yung mga tao nagbibilihan. So, kapag nagbibilihan na, tumataas yung demand, right? Pero kapag yung supply abundant, yung tipong mabibili mo siya anytime, anywhere, any day, okay? So, yung demand, bumababa kasi kumbaga, walang feeling involved na baka maubusan ka ng product na yun, okay? The concept of the time value of money is based on the notion that a peso received today is worth more than a peso received in the future. This is because a peso received today can be invested and its value is increased by an interest rate or return. Okay? This concept is based on the belief that people have a positive time preference for consumption. That is, people prefer to consume goods today rather than consume similar goods in the future. Kasi in the future, mas mahal na. Okay? Because of inflation. Therefore, people would rather have their peso today than in the future. So, yung simple and compound interest naman. Before we go to the future value and present value discussion, let us review simple interest and compound interest. Na-discuss na natin ito in a previous topic. Compound interest is the interest involved in future value determination. So, for example, first year, nagtabi ka ng pera, nag-earn siya ng interest. The following year, yung interest niya is magiging part na rin siya ng principal na mag-earn din ng additional interest. Okay? Interest is the earnings or yield on investments. To avoid the loss in the value of money, the holder thereof must learn to manage it well. One way of managing money is through investment where it can earn interest. Even promissory notes could earn interest. That is why there are interest-bearing promissory notes. Bonds are interest-bearing, hence the earnings on bonds are in the form of interest. Investments could be in the form of time deposit in the bank, MMDA, MMMFs, T-bills, or T-bonds. Okay? These investments are termed financial assets, financial securities, or financial instruments. Okay? So, yung interest in financial parlance is the money paid for the use of money lent. So, nagperam ka ng pera, hindi naman sa pinahiram mo, no? Binilagay mo sa bangko, nilagay mo sa financial institution. So, since nasa kanila yung pera, parang pinahiram mo nga sa kanila. Okay? And since parang pinahiram mo sa kanila, then it's only fitting na they give you something in return. So interest is measured by a certain percentage, commonly known as interest rate. With interest, the value of money after some period of time grows. There are two basic types of interest measurement. So yun nga, simple and compound. So yung simple lang, the interest is computed based on principal throughout time. So the formula, interest equals principal amount times the rate of interest times the time period money is borrowed or invested. Time is generally computed per year unless stated otherwise in the instrument or agreement. It follows the period in which the interest rate is stated, which could be, per day, per month, per quarter, or per year. Which means that if the rate is per year, the time should be expressed in terms of year. If the rate is per month, the time should be expressed in terms of month. Okay? So, my example dito, 1 million was placed in a 90-day time deposit, earning 5 interest. And assuming we are using ordinary interest, which means we will use 360 days for a year, for exact interest, we use 365 days a year. Okay? So, yun yung difference. Ordinary, 360 days. Exact, 365 days. Ordinary interest is commonly used. The interest earned from the said deposit will amount to 12,500 for ordinary interest and 12,328.77 for exact interest, computed as follows. Kapag ordinary, so you have 1 million times 5% times 90 days over 360 days. So 12,500. Kapag exact interest, so you have 1 million times 5% times 90 days over 365. So 12,328.77 pesos. So the instrument is 90-day time deposit. When the interest rate is silent about the period, that is, if it is per month, per day, or per year, ang assumption ay per year siya. Okay? That is why we divide 90 by 360 days for ordinary interest and 365 for exact interest. So ito na, at the end of 90 days, the investor receives the maturity value of the investment. Yung maturity value, edi yung principal plus the interest. So yung kanina natin, 1 million plus 12,500 equals 1,012,500 kung ordinary interest yung ginamit na computation, or 1,012,328,477 for kung ang ginamit ay exact interest. Okay, so ito yung maturity value na tinatawag. Assuming that instead of 90-day time deposit, the amount was invested in 1-year time deposit with the same interest rate. The interest earned would amount to 50,000. Okay, so 1 million times 5%, so 50,000. Since 1 year ito, edi regardless kung ordinary or exact, right? Kasi 1 year naman. If the interest is for 90 days, it is 12,500. The interest for 1 year would be 12,500 times 4, 50,000. Assuming the amount was invested in a 3-year time deposit with the same interest rate, so ang total interest earned from this investment would amount to 150. So yung 1 million times 5% times 3 years, 150,000. The time is more than 1 year, hence the maturity value at the end of the 3rd year is 1,150,000. Again, interest for a year of 50,000 times 3 years is 150,000, which when added to the principal amount of 1 million would be 1,150,000. Yun yung magiging maturity value niya at the end of 3 years. Okay? Assuming the amount of 100,000 was borrowed from an individual lending investor who charged 5% interest per month. Oh, that's too high. If the borrower is required to pay the interest per month until the principal amount is paid. If it takes the borrower 5 months to pay the principal, the total interest which the borrower had to pay would be 25,000. Okay, that's a lot. 5% times 5 months, that's 25%. Okay, so 25% of 100,000 is 25,000 pesos. So, ang laki, diba? So, first month, 100,000 times 5%, second month, third month, fourth month, fifth month. Okay, total interest 25,000. At the end of the 5th month, the amount needed to be paid by the borrower is the principal amount of 100,000 plus the interest for the 5th month, since the monthly interest is paid monthly, so of 5,000, which is equal to 105,000. So after the 1st month, magbabayad siya ng 5,000. After 2nd month, bayad ulit siya ng 5,000. 3rd month, 4th month, Tapos sa 5th month, ito yung last, kasi for 5 months lang naman niya daw hiniram. So, after 5 months, babayaran niya yung 5,000 na interest, tapos yung principal na 100,000 is ibabayad na rin niya. Okay? Alright, next, compound interest naman. For compound interest, the interest is computed by adding the interest to the principal to be used as the new basis or new principal for the succeeding year or period. Generally, this is on the assumption that the interest is not paid monthly. Kumbaga, yung interest kasi, hindi mo naman binigay dun sa investor or dun sa nagpautang sa'yo. Yung interest is nasa'yo pa din. Okay? So, in that sense, mas maganda kung compounding. Since nasa'yo, benefit of using that money as well. So, mag-earn din dapat siya ng interest. But is accumulated until maturity date. Simply stated, interest earns interest throughout time. This is the idea of compounding. That is, interest added to the original principal becomes the new principal. So, example, nangutang ng 1 million, interest rate is 5% per year, pero hindi siya nagbabayad ng interest kada taon. Magbabayad siya ng interest din is sa maturity date na din. So, kumbaga, may benefit of time siya kasi hindi siya nagbabayad ng interest every year. Okay? So, yung first year, 1 million times 5%. So, yung interest is 50,000. Principal na 1 million. So, yung maturity value niya or value niya at the end of year 1 is 1,050,000. Okay? Since hindi naman niya binayaran itong 50,000, nasa kanya din. Okay? So, pag mag-compute siya ng interest for the second year, kasama dapat siya dun sa magiging basis. Okay? So, yung principal niya ng year 2, ito na, 1,050,000. So, interest rate, 5%. So, yung ma-earn niya ng interest for the second year, 52,500. Tapos, daladag niya dun sa principal na 1,050,000 na. So, magiging 1,102,500 na. Okay? Tapos, carry niya yan sa third year, times 5% ulit. So, yan, mas mataas na, no? Kasi tumataas din naman yung principal. Okay? So, at the end of 3 years, ang total na babayaran niya is 1,157,625. Okay? So, ayun. Compounding interest yields a higher return because interest earned becomes part of the principal that will still earn additional interest. Kung binayaran niya to, binigay niya dun sa nagpautang sa kanya, edi syempre, principal niya na pagbabasehan on the second year would also be 1 million. Okay? Kaya lang to ginawang compounding kasi hindi naman niya binigay dun sa nagpautang sa kanya. Nasa kanya rin ito. Okay? So, that seems fair, right? The computation above just shows how interest earns interest. This is the idea behind rolling over of time deposits. That is, to accumulate interest to earn higher interest every succeeding period. However, the method above is tedious. Masyadong maraming kwentahan. Hence, it is applicable only for a short period of time. For longer periods of time, like 10 years or 20 years, it is easier to use the following formula with the aid of scientific calculator. So, yung maturity value is the principal multiplied by 1 plus the rate of interest raised to the number of years. Okay? Example, 1 million, 10 years, 5% interest compounded annually. So, 1 million times 1 plus 5% raised to 10. Okay? So, ang maturity value niya is 1,628,900. Ang interest niya, edi yung maturity value minus the principal. So, 1,628,900 minus 1 million is 628,900. So, over 10 years, ito yung interest na earn niya. Okay? Maturity value in computing compound interest is equal to the future value. Okay, ito rin yung tinatawag natin na future value. Kasi kumbaga, ito yung magiging value niya at that particular period of time. Okay, in the future. We can make use of the FB table, future value table na. The interest in the above example is earned once a year. For interest which is earned more than once a year, the formula for MB is as follows. So, kumbaga yung term niya, yung rate divided by the number of times interest is earned in a year, tapos yung term niya dito sa taas, yung sa exponent, multiply mo rin siya. Okay? So, ito yung example. 10 years siya, pero compounded semi-annually. So, yung 5% na rate, gagawin mo siyang 2.5%. Okay, para makuha mo yung semi-annual rate niya. Tapos, yung term niya na 10 years, multiply mo by 2 kasi semi-annual. Okay? Sa isang taon, twice lang nako-compound. So, 20 times in a year. Okay? So, yun. 2 times 10. Maturity value niya, 1,638,600. If mapapansin mo, mas mataas. Okay? Kasi mas kinompound siya ng mas maraming beses. Kumpara mo dito na once a year lang siya kinocompound. Okay? So, the more often it is compounded, the higher is the valuation din. Ano? So, ayan. Dito, may kadugsong pa siya dito eh. Assume instead of semi-annually, the interest is compounded quarterly, meaning 4 times in a year. So, kapag 4 times in a year, so yung 5% divided by 4, tapos yung 10 times 4 naman. Okay? So, yung maturity value niya is 1,643,600. See? Mas mataas. Okay? Kasi mas madalas siyang kinompound. Sa isang taon, 4 na beses kasi quarterly siya kinocompound. Take note that interest received quarterly, 643,600 for a year is higher than interest received semi-annually for a year, which is higher than interest received annually. Okay? Remember that the more times that the interest is compounded, the higher the interest will be. Compounding the interest monthly will yield a higher return. Okay? So, I will pause the discussion here. Ito yung first part, tapos yung second part, continue natin. Ang magiging topic natin ay dito ng future value and compounding and the rest of it. Okay? So, that's it for this one. Thanks and bye.